Personal finance is a really good intro lesson to business finance. So just like personally, I would suggest to everybody have a monthly budget, or at least do a monthly budget for 3 to 6 months to see where do you spend, give you that check-in, that data point.
Are you ready to transform your life? This is a no-nonsense show helping immigrants like you create generational wealth, even while working full-time. Get ready to take notes. Here's your host, Saket Jain.
Welcome back, my Great to Wealth listeners. Today, do I have a treat for you? Today, we're going to talk about something that I wake up to every morning. If I had to do this for a living, day in and day out, I would love to do that, which is talk about company financials. But let me put a context to it. I talk to a lot of small business owners, who are looking to exit their businesses, looking to grow their businesses and whatnot. And as my experience as a business consultant for the last 23 years, one of the things that I always tell them is that you don't have to sell your business ever, but you should structure your business in a way that could be sold at that moment's notice, right? And that's really what I want to dig deeper into today. I brought in Hurley Fox from Fox & Partners. They specialize in doing that. They specialize in helping you financially organize yourself in a way that if you were to exit, you can. So that's really what I'm excited about. That part of that is because on the journey right now to acquire a few businesses on my own. That's what I'm working on right now actively, along with every other thing that you've been aware of already. And of course, if you want to play a role into these acquisitions, get in touch with me. Get in touch with me earlier so I know what you're looking for with your capital, with your experience and all that stuff. There's going to be multiple ways to get involved. I want to open up to the investors to the extent I can. But I won't bore you with that. That's a different day, different conversation. I really want to set that stage of keep an open mind. If you have a business today, what I want you to think about, can I learn something from here to organize myself better? That's one. If you already think you are doing very good in terms of your organization, can you further optimize it? And the last but not the least, you have no business right now and you're thinking of launching a business. That's be a perfect time. And actually, one more thing I just thought about is a lot of you can replicate the similar approach in your personal finances as well, right? So I think it's for everyone, all the listeners. There's no boundaries of country. You may be dialing from Australia, from India, from China, wherever. It doesn't matter. The principles that we're going to talk about are going to hold true for across multiple borders. There may be some US specific things that we may talk about, but I would say that, and we'll make sure that we can emphasize on the things that are US only. But in general principles, for the next 30, 40 minutes, we're going to be talking in broad generalities, which you can take and plug and play in any environment you're in. So with that said, if you're driving and you're listening to this podcast, make sure you pause it. There will be some note-taking that I would recommend. There'll be times where I would say, jot this down, either my thoughts or my guest thoughts, or you may want to just take notes in general as well. Or if you want to continue writing and you want to listen to the podcast again for that purpose, that's fine too. But in case you are going to write notes, I want to make sure that you're in a safe place that you can take full advantage of the next 30, 40 minutes. With that said, Hurley, welcome to the show, buddy.
Thank you for having me. Great to be here.
So, Hurley, let's start with one conversation which we ask every guest, man. The name Migrate to Wealth. What does that mean to you?
Great question and great podcast name. We deal with a few hundred businesses on a monthly basis as their controller or CFO, and all the small mid-sized realm. And in that world, we see a big gap between our smaller clients and our bigger clients. And yet it's not just the size of the company or the amount of revenue that a person's doing or the house they live in or the cars they drive that means they're actually wealthy.
Yeah.
And so to me, migrating to real wealth is, myself and my family can be provided for in a manner that doesn't rely on me having to go to work every single day.
Yeah.
And so, our future from a financial stability standpoint is more known than unknown. And from a family standpoint, the family's wealth has also increased, right? Migrating not just myself, but my kind of family unit as well, to put them in a similar situation where we're not kind of going week by week or day by day or even year by year of, well, can we do this or can we do that? So, less stress from a financial standpoint, more certainty from a financial standpoint, and, doing that not just alone, but together with a group.
Love that, man. Love that. Hurley, so talk about what got you into what you're doing right now.
So I was working in a construction management firm when I was 18 to 21. And while I was there, I was going to school for teaching, getting my undergrad in
What were you going to teach?
history.
History. Wow, man.
Yeah. So I got that degree and certification and did all of that. But while I was there, I went to county college for 2 years, which was great. Really enjoyed my experience at county college. And then I went to state school for the next 2 years to finish the degree. When I had to go to state school, I had to go take out a loan for the first time because county college was affordable enough. Right. When I went to go take out the loan from Wells Fargo, I had to take out $22,000 for 1 year. And I remember thinking to myself, oh my gosh, $22,000 is more than I've made at that point in a year post-tax.
Right.
So it was just an amount that I, at the time, had a hard time wrapping my head around. And so I've always enjoyed money, but when I took that loan out, I got more dialed into, well, how do I pay this off? So I started setting up my first kind of Excel spreadsheets on, if I paid this month, what does my balance become? How do I pay this off as soon as possible? I kind of became obsessed about that and started looking into how to pay off student loans, debt, etc. So that was kind of what motivated me on the personal side. And then on the business side, in that company, I was doing some of the bookkeeping and accounting there. While I loved and still love teaching, I took the business route after I got my degree. And so after I left the construction management firm, I actually went to go work with the accountant that I met while there. And while I was at that accounting firm, I realized just the gap between business professionals and business owners.
Yeah.
And a good entrepreneur just solves problems. Mm-hmm. And so, my passion is really teaching, communicating, and solving problems. And so I saw in this accounting world, there was just a huge disparity between need and the needs being met. And so I worked in that accounting firm for about a year, realized that there was a ton of need for it, because here was me, this 22-year-old who didn't have any accounting or business real experience. And I started to get all this business just by asking people, how can we help you?
Right.
And so once that business kind of grew to a space where I knew that I had a business model, I started my company, Fox & Partners. And it was really just that of how can I best help business owners each month? But it starts with the bookkeeping, right? Not a lot of people want to do it.
Tell me about it, man. Tell me about it.
Less people want to and know how to do it correctly.
Yeah.
And then finally, it's keeping in mind the accounting is just the means to the end, right? So perfect accounting doesn't mean you have a great business.
Yeah.
But perfect accounting can show you why your business isn't doing well or isn't great or what it can be done to be great.
Yeah. So I think I'll probably really quick there, because I think it's a very important distinction. So let's go a little bit deeper on that. So I think it's most people. So when you're driving a car, you are looking in a rear view mirror, and you're looking in the front as well. The reason why you're looking in the rear mirror is to make sure that you're safe from all ends, right? But when most owners, when they're looking at running their own business, they're only looking forward, right? Which is great. I'm not saying that's a wrong thing. But the problem is that the decisions that you made yesterday, a month ago, a quarter ago, a year ago, maybe 2 years ago, are what's shaping your tomorrow, right? So if you're thinking of where is my next quarter revenue is going to come from, and you're thinking it in January, chances are you probably already thought about that. If you're a good business owner, you're not going to start thinking about January, how to make cash flow in March. You may, no judgment if you are, but I'm saying that most successful business owners are going to have at least quarter 2-quarter, 3-quarter, 4-quarter leg up, saying this is where my potential revenue is going to come from. Now that may change, but they have a path forward, right? Now what happens is a lot of people look at bookkeeping as an IRS headache, as a side effect of filing taxes. If they didn't have to do taxes, they would never have to do bookkeeping. I know several of those because I was one of them. But and it's kind of funny. We were advising multi-million dollar, hundreds of million dollar businesses, and when I had to do my own business, I didn't care for the bookkeeping, right? Which is kind of sad. So I think part of that is that it's a two-way information. The books of the company database, right? It's a database. How the information gets stored in the database is less relevant for a business owner. But how do you use that information to make decisions on the business is what's very important, right? So if the database has incorrect data, you're not going to be able to get insights from the business. So we'll talk about the business that I'm looking to buy right now. It's a small business. They've done a phenomenal job, but they don't have their books in as orderly manner as I would have liked it to be. So then what I have to do, and I would love to get your thoughts on that, Hurley, is I have to go back and normalize every single thing, right? Mm-hmm. Making sure, not to the pennies, because it's in the order of magnitude difference then. We need to make sure that anything that's material is categorized correctly. So then I can run some analysis. What's the revenue per employee, or what's the revenue per payroll dollar, all that good stuff. That's not giving me insight. Is that business running effectively, efficiently, and are we productive? Those are measures that I look at. So Hurley, I know I probably went too far ahead with that, but let's talk about and think of why do you believe as a controller? Actually, let's define what is a controller. What's the difference between a bookkeeper, a controller, and a CFO? Let's start there, and then let's think through why is doing things right, not for the IRS perspective, but as a business owner, what kind of dashboard view you get once your data is structured properly?
So there's a lot there. So I use the medical analogy to kind of help people understand the finance world, because our education system, at least here in the States, has done a poor job helping people understand the different roles that different financial professionals play. So just like you would never call a foot doctor for a heart problem, people are asking their tax accountant for ways to grow their business, right?
Yeah.
And so you have the bookkeeper, controller, and CFO, and different companies have different layers in between those, but we'll use those three as kind of like the three different steps up. A bookkeeper is kind of doing the data entry, the day-to-day work.
Yeah.
The controller is kind of doing the monthly closings, making sure the books are correct, making sure, depreciation is booked correctly, and the monthly closeout is done correctly, payrolls up to speed, putting together some maybe forecasts and financials looking out. And then the CFO is taking that and then again, making sure that everything kind of looks good to them, asking questions to the controller. But instead of a month-to-month and day-to-day view, they're looking bigger picture, right? Year to year, broad picture. Hey, where can we pivot? What if we bought this company? Let me be the liaison between the accounting side and ownership, right? So those are kind of the three tiers. Where people get caught up is they think, well, I don't need the CFO because I have a bookkeeper, but then you're losing the insights. But on the same side, if you just have the CFO, you don't have the bookkeeper, there is no data to get insights from, right? So you need both. And just like you would never only go to, or you shouldn't only go to the doctor because you're super unhealthy, right? We shouldn't just be doing financials because we have to file taxes.
Yeah.
We want to be going to the doctor consistently and consistently getting our diet reviewed, our blood tests done, exercise tests reviewed, sleep tests done. Why? Because we understand where our baseline is and are we progressing? Did the decisions we make have the impact we thought it would? Mm-hmm. Right? So if I'm focusing on sleep, I want to know, well, what is my sleep now? Right? If I were to say I want to sleep more, but I didn't know how much I was currently sleeping, I would have no.
What does that mean? Yeah.
What does that even mean? Right? And then the second thing is, well, why do I want to sleep more? Right? And so then I would want to answer that and think through that. And then it's, okay, well, I want to consistently start measuring my sleep and the variables that I do Do I, go to bed at this time? Is it dark? Am I eating or drinking? Because if I'm trying to get more sleep time, what are the variables I can pull? But you have to track that to know if you're achieving your goal. It's the same thing in business. If the end goal is more cash flow to ownership, which if that's not your goal, it should be. And we can break down what that means in a second, cash flow to ownership. But if that's our goal, and we then decide, well, let's hire more people, or let's do a marketing campaign, or let's, let go of a couple people or move facilities, but you don't know if that got better or worse, how can you ever make more accurate decisions in the future? So
completely. I think I'll give maybe even a simpler analogy. It's like measuring your weight every single day, right?
Mm-hmm.
If you're not tracking it, you have no idea. Are you gaining the weight? Are you losing weight? Are you bloating just because you have something else going on with your body, right? A lot of that thing is you need optics for your business. When I say optics, it's like, I know we're not allowed anymore to go inside the cockpit of a plane, but for most of us, when we go inside a plane, you probably look on the left where the pilot is sitting, you can see a lot of dials, right? That's really what the dials are. That's where the cockpit is. That's what good bookkeeping allows you to have. Then you need somebody to be able to interpret those dials, right?
Right.
But if you don't have the dials, there's no interpretation needed. Because you can't interpret. Whatever interpretation you're making is a gut feel. And you can't run a business by gut. There's a role for gut to play, but you can't make a business run successfully just purely on gut. You have to measure that with the data as well. And like what Hurley was talking about, and we'll go a little bit to the extent we can because the time is limited. Most people, it's very sexy. It's very exciting to go run a new marketing campaign. Very exciting, right? Or go launch a podcast or do LinkedIn Lives or whatever they're very sexy. They're very appealing. They're party conversations. But the key thing is it going to give you the results you're looking for? That's one. And then the second problem is, did it give you the results you were looking for? And both of these things you cannot measure without a reference point. So you have to have a reference point, right? So I'm not saying hire bookkeepers. All I'm saying in this until now is make sure you have good data. Right? Whichever tool you use, that's up to you. If you want to use Excel, paper, I don't care. But make sure you have good data, right? That's a starting point. Tools is as people spend thousands of millions of dollars on tools, which is fine, you can. But the most important thing is what tool is going to keep you accountable and consistent to make sure you have that data. Now, if you use proper tools, sure, Hurley can talk about those at length to you. But if you're using proper tools, it's going to make it easier for you. But the key goal right now is to make sure you have data structured properly and right data in the right place, right? For that,
somebody who can help you interpret the data, right? It's just like in the medical world. I mean, I don't understand any of the tests or numbers that show up, right? And so can I find somebody who I trust that can help me understand what do these numbers mean?
Yeah.
And what do they mean for me, right? Well, what are these numbers telling you and myself about what I have to do in the next month to move in a more positive way? So, like where I see a lot of small business owners trip up is they know revenue often because it's coming into the bank or they're closing short amount sales. Most people know revenue. They know that number. Less people know gross margin, right? So gross margin is after you pay for your cost of goods, kind of what's left. Fewer people know true profit, as you were just describing in the beginning, right? In certain cases, we have to add back things or recategorize stuff, or somebody put a debt payment on the profit and loss. So we have to understand true profit, which most business owners have a harder time with. And then we have to understand, well, what's cash flow? Where I see a lot of business owners get in trouble is they know their profit number, which is great. I mean, they're a long way there. Let's say it's $1 million.
Let me interrupt early. They don't know. They know a number which looks like profit. They don't know their profit number.
They know a number that looks like profit. And let's just say for this argument that it is profit. Well, you have debt payments, you have partner distributions, you have asset purchases that happen after profit. You spend that cash after that profit number. And so that's why when people say, well, how could I have so much profit and have no money in the bank? That's why, but they don't know that. And then in the US, at least, if you have $1 million profit and you spent most of it paying down your debt payments, your principal, you're going to have very little cash in the bank, but guess what? The government's going to come and tax you on $1 million of profit.
Yeah.
And so that's why having somebody who could help you interpret the numbers, verify that they're correct, that you trust, it's a really important step to making sure that the health of your business is progressing month in month in month.
Correct. I think having that optics, a dashboard of some sort, is going to do two things. One thing is it's going to make your life during the tax season very simple, right? If you instead of you doing all your books on December 31st or March 1st, because the taxes are due March 31st or whatever you are, whatever your timelines are, now you're struggling to get the numbers done. But this you're doing on a routine basis in a way that it helps you, not because you have to file taxes at some point. I want you to start thinking about, I personally want you to stop thinking about taxes. I want you to think about what information do I need to run my business properly, right? That's the vision.
We're trying to migrate to wealth. We're not trying to migrate to paying less taxes.
100%. 100%. And I love that. Thank you for saying that plug, because it's important. It's just, when I launched my business, and it's been several years now, I remember the first time, I'm like, why am I wasting time in bookkeeping? Because I'm going to file taxes and all that stuff. I had a whole lot of optics on at my end through Excel spreadsheets and all the other tools, because I'm trained to do that. But then I started figuring it out. If I actually plan it on a month by month, a week by week basis, it's less hassle, and I can build up tools that extract from my books to Excel. If that's a tool I'm comfortable with, I can get the data extracted in no time. There are tons of tools available now that can do that for you, right? So that's important. Now, Hurley, one thing that you and I were talking about before we got online was, which I also said in the context, was you need to run your business as if you're going to sell it tomorrow. You may not, you may never sell it. I'm not encouraging people to sell their businesses, but why would you want to run a business in a way that you're ready to sell whenever you can? How does that help?
Well, so what do people, if you were to put yourself in a buyer's shoes, and Socket is doing this now with a host of businesses, but if you were to put yourself in a buyer's shoes, what would you not want to buy, right? And so if we go down that list, we would not want to buy a business that loses money. Yeah, that's number one. We would not want to buy a job. I don't want to buy a business and then have to go work 80 hours a week in that business. I just bought myself a job,
sure,
not an asset. I don't want to buy a business that has old assets that I'm going to have to replace over the next few years. And I don't want to buy a business that has a poor culture and poor management employees, right? So if you wouldn't want to buy those things, why do you want to exist with those things on a daily basis?
Yeah.
So get yourself a business that can sell, because that's really, now you've reached a healthy standpoint where you can then it gives yourself options. If you structure your business where you don't have to be there every day, so it's now no longer a job, you're choosing to be there every day, can run it without you. You're buying a business that's cash flowing to you consistently and has good management and good assets. You're giving yourself the freedom to decide, well, do I want to stay here? Do I want to sell this business? Do I want to buy another business? You're giving yourself a ton of leverage and options for the future, which is what wealth is truly all about, right? It's the freedom to choose, well, do I want to sell? Do I want to buy? Do I want to stay for another couple of years? That's what the wealth goal is. And so just like we wouldn't want to buy a company with those things, you don't want to be in those things every day. And so structure your business to not have those negative qualities to it. So that way, if and when you want to sell, you can, or if and when you want to not be working 40 hours a week, 80 hours a week, 100 hours a week, you can. Or if you just want to have some more flexibility in your life, you've structured the business to allow you to do so.
And that's a great point, Hurley. I think it's let's take it one step further. I think maybe a different analogy here as well is, how many of you have sold a whole house that 30 days before you're selling, you're doing a major renovation because of something that needs to be done for you to sell it? And how many of you think that I wish I did this 6 months ago so I could have enjoyed the renovation? I'm spending $60,000 to make maybe $40,000 more money inside of it, which is all good.
Yeah, and it's a leverage thing too, right? So using that analogy, you're only doing that rehab work for the new buyer, not for yourself.
Yeah.
And so the buyer, essentially, in that case, is telling you that you have to make those certain changes.
Correct.
Right? It's a leverage game. And you have to sell the house because you don't have financial security without the income of that house.
Correct.
And you've lived a certain life where you need X, Y, and Z. That's if we paint the next picture of you have a house that is beautiful inside and out. The inspections are clear. You don't need to do any rehab because you've spent 20 years of constant updates and it's a beautifully running house. And everybody would want to buy it at the price you want to sell it for. You can sell it whenever you want, at the price you want, and live your life, a happy
100%.
So it's a leverage thing.
I think the second thing is that if you were to buy, so I think a lot of people are emotionally attached to their businesses for the right reasons because they put their heart and soul into it. But
and what's interesting about that, right, is what do we become emotionally attached to? That which we give the most to and we sacrifice for is what we become attached to. People think I sacrifice for something because I love it. No, you love it because you sacrifice for it.
And that's a very important point, right? So I think it's a mindset thing. Make sure you're using the right words and the right causation, because in this case, the reverse causation. It's a very important thing. So if you were to come to me, put yourself in a buyer position. If you would not buy a business that's not running properly to whatever standards you have, why would you want to own a business that's not running properly? Running properly. Doesn't matter you've spent 20 years or 2 days on it. Doesn't matter. Right? So I'm trying to remove the emotions for now. I'm trying to think about it. If you were to come and buy my business and you think I have a declining revenue, or I have crappy ARs, or I have very bad negotiations with my vendors, all of the good stuff that you don't like, right? You're not going to give me the price that the business deserves.
Right.
So now flip the switch and say that if you don't even know that data for your own business, first of all, you don't know if it's a crappy business or it's a great business from your own standards. I'm not saying let Hurley or I judge your business. I'm not saying that. You be the judge of what is a parameter for you to buy a business. And then use the same lens to reflect on you. Are you adhering to the same standards? If you are, great. If you are not, it's time to make some changes, right? Because most of us are and if it helps, go through a transaction where you're looking to buy a business.
Right.
You will get clear about what your business should be. I'm 100% guaranteed. If you're trying to buy a business that's going to cost you $500,000 or $1 million, or even $100K, you're going to be a lot more diligent about that business that you're buying. And let's say you just do it for tire kicking reasons. I hate for you to do that for tire kicking because you're wasting somebody else's time. But let's say you do that, you're going to walk away with so much understanding of what is the problem with your own business, right? Because it's easy for me to apply a critical lens on somebody else's business because you're not emotionally attached to that. But when you turn the finger towards you, they're like, oh, but all these things are wrong with my business. So how do I fix that? Or my business is better than ever. Perfect. That's fine too. But it gives you that moment of introspection. And you need that. But of course, you can't do that without data, right? So you need to make sure you have some insights to draw on. But that insight's only going to come from data. Hurley, did I say it correctly? Did I miss anything?
I mean, imagine if somebody came up to you and said, hey, I want to sell you this business. I don't know how much money I made last year. I don't know if I'm profitable or not, but it's a really great business. The people are great and people like our product. Would you buy it? You wouldn't.
I'll buy it for $0.
Right. You buy it for $0, right? Or I give you money to buy it.
You may have to give me money to buy it. Yeah. I'll take it.
Yeah. And so again, you're not in you want to have control over the sale or purchase of your business, right? And so if you are operating with either unknown financials or poor financials, you are not in control, right? The buyer will be in control. And then thinking about that, if you were to buy a business, the one question that's probably going to come to your mind first is, well, how much money will it make me? That'll be the first question. And you only know that by truly understanding, well, what's the cash flow? You're not going to worry about, well, what's the revenue? How many employees do they have? How much money is it going to make me? If it's going to make me 10 to 40% of my cash, amazing. We can go further. If it can't, okay, I'm sorry. It's just not the right fit.
Correct. 100%. I think it's also at the same point, if you optimize the current business by knowing the insights of the data of the business, you also will figure out the levers to grow, right?
Right.
Because right now you're in so much noise that you're hearing and nothing is validated. because all of this is gut feeling. And I'm a big proponent of gut feeling. Don't get me wrong, but you can't run a business with a gut, right? You can start a business with a gut. You can grow the business with a gut, but you can't run a business with a gut.
You definitely can't sell a business with a gut, because guess what doesn't go with the business? Your gut.
It doesn't go. So you have to have these businesses have to be boring, right? Take the thought that I need to create the next sexiest business in the world. You can, and you will, and you may, but that shouldn't be the intention. The intention from the business is a boring asset, because the most successful businesses are Coca-Cola. Do you think Coca-Cola is sexy? It's not, right? There's nothing sexy about it.
You know what else is boring? Wealth. Wealth is boring.
It has to be
being
boring.
rich is sexy.
Yeah.
And people want the rich and the quick turnaround time. You know what's really boring and really unsexy? Hey, take 20 years, and if you do these few things, you'll become wealthy. It's so boring that most people won't do it. And yet, at the same time, it's so simple.
I think most of it is simple, man. I think you just need to pair most small businesses, entrepreneurs did not start the business because they had the financial expertise. That's not the reason. So if you're in a place, if you're listening to this podcast and you think I could have, should have, would have done all these things, don't, because you are wherever you are, right? We're not trying to financial shame you into trying to make a decision. All we're saying is that realize the importance of tracking financial information, be it revenue, be it any of the three statements, right? Your income statement, balance sheet, and cash flow, which is maybe a different podcast all in together, because most people don't even know their three statements, which is kind of very sad, but it's fine. It is what it is. But you need to have those financial understandings. If you want to create wealth, you need to make sure your financial IQ is high. And when I talk about financial IQ, I'm not saying understand Wall Street jargons. I'm not saying that. All I'm saying is these common things. What is revenue? What is your revenue? What is revenue from the business? And what is your revenue personally, right? What are your expenses in the business? Which are direct and which are indirect? And why is it important to understand direct and indirect revenue, right?
If accounting is the language of business, which it is, and you don't speak the language or have a translator which you trust, how are you going to succeed?
That's a problem. I think that is the core of the message that we want to give today, is that and I wouldn't have even talked to Hurley about this stuff. I'm in the process of probably evaluating 5-10 businesses a day right now. And I look at them within 5 seconds, I know if I'm going to look at that business even further. Doesn't mean the business is wrong. It's serving somebody's purpose, but it's not going to serve my purpose, right? And I don't want to buy a job. At this point in my life, I'm not looking for a turnaround. I don't want to fix a crappy business and turn it around and push it further. I've done that before, and it takes a lot of effort. So part of that is that and all I'm looking is financial data for now, right? If I look at the financial data and I'm making the wrong decision about your business as a buyer because you didn't track your financials right? I don't have the time, right? I've already moved on. So it's kind of like my loss as well, but as a seller, it's your loss even more, because a lot of people are not going to give you the multiple that you deserve, right? Which is the problem. You may say it's your loss. You didn't buy it. Perfect. But chances are other people are going to look at the same way, right? Nobody wants a problem. Everyone wants a solution. That's the approach you want to think about. So if you're handing your problem to somebody else, it's going to come at a discount. But if you're helping, like in Hurley's example, you have an impeccable house that you have maintained for the last 20 years. You're not giving them a problem. You're giving them a solution. And a solution comes at a premium. Problem comes at a discount. Solutions come at a premium. You wanna execute so that you get the premium for your business, right? So Hurley, in the interest of the time, what are the things that you think that as people are thinking about getting organized around their financial information that they need to do?
Personal finance is a really good intro lesson to business finance. So just like personally, I would suggest to everybody have a monthly budget, or at least do a monthly budget for 3 to 6 months to see where do you spend, give you that check-in, that data point. Everybody should do that, once a year, do a monthly budget, or, if not every month. The second thing is understanding what your net worth is. So your net worth is a business, it's like a balance sheet, right? What are all your assets? What's the stuff you own minus all the debt you have? That's going to give you a net worth. What's that number? And then the profit and loss is similar to the budget, right? What do we spend money on each month, and where do we make money each month? What are we left with? Understand those two numbers, and you want to track those two numbers, especially net worth, on a monthly basis. Is my net worth increasing? If not, can we increase it? And if it is, how can we increase it? Even more. And so doing that is a really great lesson into the business finance, because it's easier to do the personal finances, right? It's less complicated. There's less variables. It might just be you. But then taking that exercise of those numbers and apply that to your business. So can you get an accurate profit or loss on a monthly basis? Have you had a third party verify that the financials are correct? Even if you love your bookkeeper, accountant, CFO, controller, etc., have somebody else just take a look at it. Hey, how does this look to you? How do you compare to your peers? How does your balance sheet look? Is your balance sheet accurate? Every number on the balance sheet should tie to a document, right? Loan agreement should tie to a loan. Assets should tie to an asset purchase document, etc. And then finally, what's the cash flow going to ownership? What's that number? Free cash flow. So without you working, because that's your salary, not owner dividends, what is the business generating in free cash flow each month? And that number will dictate a lot of what the business can do. If you don't know those numbers, find somebody who can help you identify them. If you do know them, then make sure you have a plan on how to make them even better.
Yeah, thank you, Hurley. Hurley, is that something you can help them with?
We do it every day, all day. We love it. We love getting into the weeds, doing the boring stuff to help business owners, do the exciting stuff. And so you can find us www.foxandpartners.com, foxandpartners.com. You can search my name. There's not a lot of Hurley Foxes in the world, so my LinkedIn profile will come up. Feel free just to book a Zoom call with me for free. We'll talk about your business. I'll look at your financials. I'll give you that gut check and some thoughts of my own. If nothing else, it gives you a third party or data point to say, okay, I'm going in the right direction, or I need to pivot.
And who is the right person for you, Hurley, who is starting out in personal finances, they're in business? Who's the person that they should reach out to?
Our kind of core client is doing a few $1 million in revenue, 10 to 15 employees. We have clients that do $1 million in revenue on the smaller side and are growing. And then our bigger clients are doing about $100 million in revenue. So if you have a business and you're in that range, feel free to book a call. And if you're, truly willing to, hey, because the hard part is we're going to come in, we're going to ask you for all this data, right? And if you're not serious about kind of getting it cleaned up, well, we can't really help, right? So you need to help us help you. But if you're serious about that and you're a small business owner doing, that kind of size business, then it's worth the conversation.
Perfect. And Hurley, do you, just trying to ask some questions about your business so people get clarity in what you do. If people don't have their books in order, can you get them in order?
Yes. Yep. So we have businesses. I'm speaking with one today that has been in business since 2017 and does not have financials. So, we will help them kind of create their initial financials. And then most of the time, small businesses don't have accurate financials. And again, there's some stuff that's more, detail oriented. That's all fine. But most business owners, are missing significant parts of their financial kind of puzzle. And so we'll fix it, clean it up, and then we work with people on a monthly basis. So it starts with an onboarding process, and that's a retainer. And then once we get the books cleaned up and the financials are clean, then we work with every business on a monthly basis. That number does not change. And there's no contract. So it's month to month. We have to earn our keep every month.
Love it, Hurley. Hurley, anything that you think that listeners, as a parting comment, that we haven't covered so far and that the listeners would benefit from?
I would say, to your point earlier, if you're behind the eight ball, don't worry about it, right? The best time to plant a tree was 10 years ago. The second best time is today. And so today, ask yourself, do I know what my free cash flow to myself from the business is? If you don't, that's telling you have to go and take certain steps.
100%. And guys, you can't eat profit. I cannot emphasize enough where people start to open bottles of champagne to look at the profit number. You cannot eat profit. You can eat free cash flow. That's the only thing you can eat. So understand the difference between the two. There's tons of Google resources. Reach out to me, reach out to Hurley. We can explain what that really means and how to come to that number. But it's important to understand from the top, which starts at revenue, to all the way to free cash flow. You have to understand the journey your dollar takes, right?
Mm-hmm.
And the leaks that you have. It's very, very important. I cannot emphasize enough. Focusing on revenue is not necessarily the most efficient thing, because you can chase revenue for the rest of your life, but it would take 60 to 90 days to fix most of the leaks. And once you fix the leaks in your cash journey, you're basically saying, I have built a good foundation, so now I can optimize the revenue maximization, right? People just look at things differently. They're always looking at, I need to grow my revenue. No. You need to grow your free cash flow. And there are multiple ways to do that. Revenue is one lever. But you'd be very surprised if you can decrease your expenses by 20%, you don't need to increase your revenue by 20%. A lot of that is in your control. A lot of that is. But again, if you don't know it, you won't know it, right? So that's really where you need to have the data in place. So I highly urge you, if you are in a business, or if you're thinking about a business, or if you're in your personal life, you don't know how much money is coming in, how much money is going out, get some help, professional help. It's not that expensive in a relative basis, because you always have to compare it. It's the cost of hiring someone like Hurley versus not doing it. The cost is pretty high of not doing it. It's not something that I would recommend.
And again, what do the wealthy look at? The wealthy don't look at the cost; they look at the return.
The return, yeah. And if that return helps you, and you're the judge of your own, right? Hurley's not gonna twist your arm, and I don't get any money from you talking to Hurley, so I'm clean in that regards. Full transparency. There's no commission split or anything. So talk to someone like Hurley. If you don't like Hurley, talk to somebody else. If you like Hurley, if you think the conversation is going fine, set up a free call. There's no reason not to, and then learn more about it, and then see where it goes. But not doing is not an alternative. That's what I would say. This podcast, if you're walking away with one thing, is not in this day and age, where things are available and accessible to us much easier in terms of the financial information. There's no reason for you, if you're a listener to this podcast, in coming to me 6 months later, I don't know what my personal finances look like. I don't know what my business finances look like. Can you help? It's just not a good excuse at that point, right? So things like that. So I would end it at that. Hurley, any parting comments, buddy?
No, that's it. Thank you for the time. That was great. Saket, great to talk with you, and hopefully it's helpful to your audience. And if you're looking for us, www.foxpartners.com, my name on LinkedIn, and you also see some resources that we've written up about, case studies, how to find and measure free cash flow, etc. So yeah, hopefully it can be beneficial to your audience.
Awesome. Well, thank you again, Hurley, and thank you for the listeners. Sorry I went on a rant today, because that's a biggest pain point of mine. When people come to me saying, I don't know what my business is doing. Well, then why are we doing the business? Right? So it's a pet peeve of mine. So if it came across, it was intentional. I wanted to make sure that I provoke you guys a little bit to push you into action. But thank you as always. We would not be here without your support and time. Hopefully you got the value from this podcast. And I would love to hear from you. Where are you in your journey? How did this podcast affect the journey? And if you end up talking to Hurley, send me a note. How did that conversation go? What other content can we bring you through Hurley to make sure that you're not paying for it? The good thing with a podcast is you're getting free information. And we can bring Hurley back on if there are a lot of people that are going to Hurley and have questions. But thank you again. Thank you again, Hurley. Appreciate it, buddy.
Thanks, Saket. Yep. Bye-bye.
If you got value from this episode, you might consider sharing this content with a friend. But most importantly, be sure to take action on what you've learned. One way you can take the next step is to connect directly with Saket on an investor call. That link is waiting for you in the show notes below.